Some of my puts went up 300% and some of them went 1000%. Those were same day puts that I got just before the CPI announcement at 8:30, right? So this was a huge win. Surprisingly, this was our 10 bagger for the week, but we did very well on those. We made a lot of money and it went exactly as predicted. Hello, ladies and gentlemen, and welcome to the Ash Show. I'm your host, Ash, and it's time of the week where I bring you another watch list where we cover last week's plays, how they went, and what I learned from them. This week's earnings, this week's major economic events, this week's watch list, and as always, this week's 10x Lotto play. But before we get into the list, if you want to support me, please subscribe to the channel, like this video, and share it to whoever you think might benefit from it. I don't sell anything, I don't charge anything for this stuff, so if you feel that you got anything out of it, please share this video. It would really mean a lot to me. This is a new channel and we're trying to grow it here, so this will be super helpful. So without further ado, let's get into it. So let's start with last week's play as they unfolded. So last week we had 8 plays. Our first play was the earnings play, Oracle. Now this one went as expected. I was a little unsure of it, but I got puts and puts paid out, so we're all good there. Now the next one was a disappointment. It was Adobe. Now Adobe beat EPS, they slightly missed revenue, they beat guidance, everything looked good, we're ready for a big run up, but then they announced that they're making a stupid acquisition of Figma, which it makes sense, it was their competitor, but the problem here is that they bought it at a 50x earnings multiple. That is way overvalued. This is twice the price market. To make things even worse, it turns out, it came out later that no one was even bidding with them. It was just them alone, right? They overpaid for this in a very harsh economic climate with a looming recession, if we aren't already in one, and the stock reacted as much as you would expect, down 18%. Our calls absolutely went to zero. It had huge bullish momentum going into this, but it is what it is. This is how earnings go. Surprises happen. So we took the L on this one, just went to zero here, right? The next one here is the one where we made most of the money this week, which was the CPI play. Now, as I told you guys, as we predicted, I told you everything was way overbought, and it's just like there was no way that we could go anywhere but down. Even if the CPI numbers came well, as most people expected, thing is that the charts were way too overbought for a very long time, so we were expecting a dump sooner or later, right? And as soon as we got into the start of the week and I saw that we were still overbought and nothing was changing, I actually doubled down and got more puts, because this just told me that this is a bull trap in the making. And just as we predicted, the market tanked, and as you can see here, some of my puts went up 300% and some of them went 1000%. Those were same day puts that I got just before the CPI announcement at 8:30, right? So this was a huge win. Surprisingly, this was our 10 bagger for the week, but we did very well on those. We made a lot of money and it went exactly as predicted. Now the next plays we have here are Nvidia, Tesla, and Upstart. Now these were no plays, of course, because the market was down, so that they were invalidated, but surprisingly these showed amazing relative strength. That means if the market was bullish, these actually would have played out exactly as expected, but of course they were invalidated. But our technical analysis has not gone to waste. We'll talk about this later in the video. They are still in play here. Now QQQ is another one that did really well. This was our bearish play in case the market tanked, and as predicted, tech took a very heavy hit, much harder than other stocks in the market did, right? So if you play those, puts should have paid you well. Now for our 10x Lotto play, Netflix does not understand what bad CPI means. It does not understand what a huge market drops means, because the second day when the market was red, Netflix ran almost 7%. It ran to 240 right after CPI. It seems someone out there really wants to fill the gap, and on Friday it did the same thing. It ran again another 5%. It looks like someone out there is thinking exactly what we're thinking, and with a bullish week coming on, right, we can expect a possible attempt at the gap fill here. We'll talk about this later on, right? But this covers last week's play. So overall, we were winning with the exception of Adobe. It is what it is. these are earnings play. You can't really, that's why they're lottos. Now they have everything wrapped behind us. Let's get into next week's plays. So as always, we start with earnings, right? And earnings here, I will not be playing anything before the CPI, right? All my plays will be post CPI. So I'm gonna play Costco on the 22nd, which is a Thursday, right? So Costco reports after close, right? It's a consumer retail. Everyone of course knows what Costco is, even if you're not from the States. Earnings call time should be around 4:05 p.m. Estimates are EPS of $4.16 and revenue of 70.8 billion. Those are monster revenues right there, right? So for our unusual options here, we have the 540 call option chain. This one had a lot of interest, right? This one has the highest interest, even though it was for the further out expiry, January 2023, but still it shows that people are bullish on it long term. We have options here pricing a 6.3 move on earnings, and for a change, this CEO, unlike the FedEx CEO, seems pretty dovish. When he was talking about inflation just a couple of days ago, he was expecting it to come down, right? So this seems bullish. I don't think he'll be saying things like that if he was not expecting great earnings. So my play here will be the $520 call option for Friday, 23rd of September, right? I'm just gonna go with the flow here. Just add to that most retailers and similar businesses beat this quarter as well. So I think we just follow in the similar trend. Now, my second and last earnings play will be same day, also after close. It'll be Accenture, ACN, right? So if you don't know what this is one of the biggest consulting firms in the world. Now, again, earnings call at the same time, around 4:05 p.m. Now, estimates here, we're expecting earnings per share of $2.57 and revenue of 15.4 billion. Now, our unusual options for this one is, unsurprisingly, the 270 puts option chain. This one has the highest open interest rate, right, with a put to call ratio of 2.1, right? So leaning pretty heavy on the puts here, right, for the 23rd September expiry. So these are people playing the earnings, right? So we have options here pricing in a 6.4 move on the earnings, and honestly, just, I'm just gonna go logically with this one. Option side and everything. Think about it. Who in this economic climate is willing to pay expensive consultants a shit ton of money, right? It just doesn't make any sense. And if you look at the chart, you can see a huge sell-off in the last month leading up to earnings, right? So it seems that people overall are very bearish on this company, and it makes sense. They provide not very essential at the moment service. I can see people, of course, consulting to help them with major issues, but we're not at that stage yet. So I think this quarter will not be so hot. I'll be playing the 2060 puts that expire Friday, the 23rd of September. I'm just gonna go with the flow on this one as well. So this wraps up the earnings for this week. I recommend you get them early in the week to avoid high premiums, ideally the week before. I'm gonna find a way to do the earnings early on, so you guys have the option to buy them early on if you want. All right, now this wraps up earnings. Let's get into the major economic events, and we have one main event this week, very highly anticipated. We have on Wednesday, the 21st of September, the Fed interest rate decision at 2 p.m. and then half an hour later we have the Fed press conference where Big Daddy Jay Powell comes up and talks about like expectations, guidance for upcoming meetings and how they came up with their decision. So right now, as it stands, the market is pricing in an 82% chance of us getting a 75-point rate hike, and that actually came up early on in the week when CPI was released. It was at 70%, but as we went through the week, it shot up to 82%. We also have an 18% chance of getting 100 points, which, by the way, a lot of people are calling for this, and just so you guys know, this is extremely disastrous, right? This brings us a lot more problems than it solves. We risk deflation, we risk economic problems. This is another video for another time. I'm not just going to be talking about this right now, but just so you guys know, you need to look more into this before calling out for 100 points. It solves a short-term problem but brings a lot of long-term problems, okay? But in all cases, it does not really matter, because almost all the time the Fed usually goes with whatever the market prices in the most, right? So with an overwhelming 82%, I think we're very likely to get the 75 points here. And if we get that, as always, of course, market runs if we meet expectations. So if that happens, we should continue our run. Now, if we get anything lower than 75 points, wow, calls are going to be glowing green, super green here, right? So in either of these two cases, 75 or below, calls are good. If we do get the 100 points, which I really don't think we get, we might finally get, one of those rare circuit breaker days. We're gonna get a huge sell-off as the market tries to very quickly price in 100 points, and of course all the future economic ramifications that comes with it, right? Now, one point to note here that there's a decent chance that we sell off after the FMOC. Maybe we sell off midday or end of the day or even next day, or we can keep running all the way up until the next major event, which is not that far away. It's the GDP print, which a lot of people are expecting it to be negative. So we have 3 negative reads in a row, which definitely then confirms the recession. No one can say, just like Biden came out and said that, this is not technically a recession. You get 3 prints in a row. I don't think there's any argument that we're not in a recession. This could be bearish, and of course, then we can see the market drop down. The reason why I'm expecting a drop down, because as we know, we are definitely in a bearish trend now, right? If you look at the chart here, we just made a lower low, so we officially confirmed that we are in a bearish trend, right? And we're under 200 MA. Everything points to us right now being in a bear rally if we run this week, right? So it will be just a bear rally. Now the level to look at here is the 400 on the SPY, right, which probably equates to around 4020 on the SPX, right? So this is the level I would keep an eye on here, right? So I expect we either make a lower high at 400 resistance or maybe at the 200 MA on the daily chart. So these are the two things to keep an eye on. I would definitely be trimming most of my calls by then if I'm not completely out. That's of course, if it runs, on FMOC day. All right, so this wraps up the major economic events. That's pretty exciting stuff. Now let's get into the watch list for this week. Now the watch list for this week mostly calls for bullish plays because based on how Friday closed, I think we're gonna open pretty green next week. So my first play here is surprisingly GME, right? Like I said, I don't get married to a stock or a play or anything. We tried puts, it failed. Let's try calls now, okay? So, we see here GME basing at the 28.3 resistance level, right? It closed above that on Friday, which is pretty bullish, and we can see a hammer here. So if we get a bullish Monday, we can see a run all the way up to $32.50, which will be my first take profit target. And if we continue running into the FMOC, we might even see a run to $38 or more, right? So this will be my second take profit target here. If you look at the MACD on the daily, it's about to flip. So this is definitely a bullish sign. All right, now FedEx. Now FedEx is way too oversold from their shit announcements before the earnings, right? They do have earnings coming up again. It's a little bit confusing, I know, but it dumped on remarks from the CEO, and they're reporting some stuff on the 22nd or 23rd, I'm not sure. But anyway, in all cases, if the market is bullish, we can see a move between then and the earnings call, or we can see, because this is as you can see here on the chart, is virgin gap fill territory, right? It will move very easily right in the gap area. Now of course it's not gonna gap fill. I don't think there's any way this happens, unless we get like some super unexpected news, but it might be a quick nice scalp or day trade here for FedEx, if we open bullish on Monday. Okay, here we get into some of last week's plays. Now Tesla, we drew a line and we said, like this is the line in the sand, and as you can see here, it fell, but Tesla has been showing amazing relative strength here last week, right, relative to the market. And as we can see here from the volume profile, there's a volume gap all the way to $330, right, which would be our take profit target here if the market is bullish. Now Nvidia here is a call that we had last week as well. They have an investor conference on Tuesday, and still they have the small gap to fill from last week, but at a much better entry point now. So I'll definitely be picking calls as long as we maintain the bullish market momentum and we can see the gap fill here, which will be my take profit target. Now Upstart is also another play from last week. Same thing, it's at the very bottom of the channel here. It held support very well, right? So we can see with bullish momentum a move to the upper end of the range, right? I don't think we'll gap fill. I think we need like some substantial catalyst in order for it to move, because the gap fills all the way up to the 70s. I really don't think that will happen. I hope so, because I already got calls on that one on Friday, so we'll see how that goes. But then again, all these plays are only valid if we have bullish momentum throughout the week. Anything that happens, you see momentum turning, bad FMOC or a drop after the FMOC or anything like that, or a bad open arm. These are all invalid. You just wait to see if we get more bullish momentum, because right now we are very oversold at the moment. We need a bear market rally here, some breathing room. All right, so let's get into your favorite part, the potential 10 bagger play. Now, nothing new here. I'm gonna go with the same one we had last week, because this one is like Netflix, guys. Like this is pretty amazing here. This one is definitely sell and play here. Nothing has changed. Amazing volume, amazing movement, right? Even with the market is down, fantastic relative strength here, right? If we keep up the bullish momentum for this week, if we get a strong open Monday, if we get good expected or lower FMOC numbers, and the market pumps and keeps pumping till Friday, or maybe GDP even, if we pump till GDP, I think there's very high chances that the gap fills here, right? So like I said last time, 249 is the magical resistance here. This is the magical number. We break that hard resistance, which we have been trying to break for a while. We will see a gap fill very quickly, probably within a couple of days. That being said, I have the 270 calls that expire October 21st. That's a little right after the earnings. And I have September 23rd, 245 calls in case, it happens this week. It happens quicker, right? So again, we need bullish momentum for this play. Keep that in mind. Otherwise, the play is invalidated and I will be exiting my positions. But listen, guys, like if we have the bullish momentum, worst case scenario, we make a little money instead of making a lot of money on this play if we still have bullish momentum for this week. So I think this is a low risk, high reward play, which is the type of plays you want to be in all the time. Okay, so this wraps it up for this week. As you guys know, I do this every week. So if you have not subscribed, please do subscribe. If you enjoyed this video, please give me a like and share this video around. This is the best way you can support me and this channel. It would really mean a lot to me if you guys can help spread this video a little bit. In all cases, thank you so much for your time. Don't forget to join our Discord. The link is down below. We have a fantastic little community there, and see you on the next one.